Joining me now to discuss Bitcoin and more is Jeff Dorman, Chief Investment Officer at crypto asset manager Arca. Hello there, Jeff. So why are we seeing this sell-off in Bitcoin? What do you think is driving it lower?
Well, as we always say when we come on your show, Bitcoin is a long tail call option, and the day-to-day moves are very difficult to assess. We jump around a lot in terms of drivers and correlations. Over the last 4 weeks, just about everybody who trades Bitcoin has become a macro trader, right? Most people didn't care about the month-over-month CPI prints until last month when it was at 6.2%, and now everybody cares a lot about the CPI prints. Similarly, Omicron came about. Everyone got very worried about what Omicron would mean in terms of future lockdowns or declining GDP. What's interesting to me, though, is that over the last 4 weeks, basically since November, right before Thanksgiving, just about every other risk asset has now completely retraced all of the sell-off from the last 4 weeks. The credit markets are back to all-time highs. The equity markets are basically back to all-time highs. The VIX has completely retraced the volatility index. Really the only difference in the market today versus 4 weeks ago outside of digital assets is the shape of the yield curve, which has flattened a lot. The 2-year Treasury yield is higher. The 10 and 30-year Treasury yield is lower. Everything else is completely retraced as if Omicron and the CPI print didn't even happen. So it's only digital assets that are struggling. And if that's true, that we are just tracking macro right now, well, tomorrow's a big day. Tomorrow's the CPI number. If that comes in anywhere close to consensus or lower, I think you're going to see a big move in Bitcoin. I think you're going to see a big move higher in basically all risk assets because it shows that this, higher levels of inflation are starting to subside. And that should be a boon to Bitcoin. As far as what's happening today, day-to-day fluctuations are hard to tell.
It's interesting you mentioned that risk assets are back to pre-Omicron inflation levels, except digital assets. Why do you think that is? Is it because that they're not correlated, or what do you see as a reasoning behind Bitcoin lagging?
I think we always know that long-term, the correlations are not that high. But over the last 12 months, Bitcoin specifically has had a much higher correlation to equity markets and to rates than every other digital asset, which makes sense because Bitcoin is in fact a macro asset, right? It's a long-term option on purchasing power and store of value, whereas other digital assets are really more like quasi-equity into the growth of networks or the growth of companies, like whether it's DeFi or sports or NFTs or gaming. There's really no reason why other digital assets would have higher correlation, but Bitcoin naturally does. So I think, longer term, most correlations are still very low. Shorter term, in the last 6 to 12 months, it's been very high, and it probably will continue to be very high. And I think that, like I said, if Bitcoin is going to be a leading indicator, then that would suggest that equities are probably, that this is a little bit of a dead cat bounce, and equities will probably come back down. If Bitcoin is being a lagging indicator, well, it's lagged quite a bit relative to the bounce in other risk assets. So again, I think the CPI print tomorrow and the Fed discussions next week, if we see a less than scary CPI print, and if we see a little bit less hawkish Fed, I think it'd be very hard pressed not to see Bitcoin rally into the year end. And we've seen this the last 3 years. If you look at the chart of Bitcoin over the last 3 years, the first week and a half has been low. We've seen declines from December 1st to anywhere between December 9th and December 17th. But the last few weeks of every year, the last 3 years, you've seen a huge move higher in Bitcoin. And I would expect the same thing to happen, especially if these macro conditions continue to subside.
I want to pivot toward the congressional hearings on crypto that took place yesterday. And I preface this by saying you've teased your predictions for the digital asset market in 2022. So I want to get your thoughts on those hearings. And in the first page of your predictions, you do mention that regulation will be slow.
Yeah, I think it's inevitable that regulation, especially here in the United States, will continue to be very slow. I thought the testimonies yesterday in the hearings, it was the first time we've really seen a forum like that be pretty balanced, right? It wasn't bipartisan at all. There was no, Democrat versus Republican issues. It was really pretty calm. It was pretty even keeled. It was pretty balanced, with the exception of a few like Sherman, who obviously has very draconian views on this space. But for the most part, it was pretty balanced, and it was healthy, and it was encouraging to see this stop being a attack on the digital asset industry for what it is not, and instead being more of an educational journey to how do we continue to foster growth across digital assets? How do we find different pockets of the digital asset ecosystem that are beneficial to many parties here in the United States and abroad? And I think it was as positive of an outcome as you could expect from a setting like that. In terms of what will actually get done, however, it's a mixed bag. I think stablecoin regulation is absolutely first priority. I think that's the one that makes the most sense. I think that's the easiest to implement with in terms of operating within existing laws and frameworks. I think everything else is a multi-year process. You need new laws, you need new frameworks before you're going to be able to push any sort of real regulation across other aspects of this industry.
Also want to get your outlook on Bitcoin in terms of 2022 predictions. Where do you see Bitcoin in terms of price predictions?
I don't make price predictions, but I will tell you that I saw your Bitcoin dominance chart before I came on, and I think that's the easiest call of anything. Bitcoin dominance will continue to go lower. It will likely never go higher ever again. It's a flawed metric to begin with. It makes no sense. By definition, as if a market is evolving and you're going to have new issuers come to market, you're going to have new sectors, new issuer types. By definition, Bitcoin's share of the overall digital asset market will go down. And that doesn't mean Bitcoin can't become a $10 trillion asset. It very well may, may go up, 1,000x, or sorry, 1,000% or 10x from here. But it's going to continue to lose market share to the rest of the digital asset industry.
Yes, and to that end, I know you're very active in decentralized finance, particularly SushiSwap. They're having a bit of a crisis. Their leadership team is falling apart. But this is a Bitcoin show, and there are Bitcoin DeFi projects out there. So I wonder, more generally speaking, are the problems you're encountering at SushiSwap characteristic for DeFi projects or specific to this case?
It's specific to DAOs in general. Decentralized autonomous organizations are experimental. Most people talk about decentralized versus centralized as being black and white. We don't see it that way. We see it along a spectrum. Fully centralized is rarely the best option because you have too much of a single point of failure and a single point of control. Fully decentralized becomes, outright chaos because nothing ever gets done and there's no leadership. What you want to do is work along that path where you have a few centralized best practices in terms of leadership, in terms of guidance, but you ultimately lean towards decentralization with regard to ownership of the tokens, ownership of the DAO, who gets to vote on big key decisions with regard to how money and resources are spent. And I think SushiSwap is going to be a Harvard Business School case study for years with regard to how to fix that. From my standpoint as an investor, this is the dream distressed scenario. It's very hard to find a company that has the kind of product market fit, the kind of traction, the products, the user base, the community that Sushi has. What they have is a leadership crisis. That's the easiest thing to fix. I mean, that's activist investing 101. As you come in, you blow up leadership and management, you put a new structure in place, and all of a sudden you hit go and everything's working perfectly. What you can't do is fake the kind of success and growth that this project has had. So, again, not specific to Sushi, specific to all DAOs, it's challenging. And it's about putting in proper structures and straddling that line between decentralization and centralization.